Tesla was the worst performer in the S&P 500 today after reporting a drop in annual deliveries, its closest stat to sales. The stock has been under pressure in the last 2 weeks, now falling in 8 of the last 10 sessions. Shares are down some 20% since the slide started on December 18th. Joining us now is RBC Global Autos analyst Tom Narayan. He has an outperform rating and a $313 price target on the stock. Tom, Happy New Year. So Tesla didn't get up here price-wise on deliveries expectations. So any reason to think it goes lower on the miss?
It could definitely go lower. I mean, this stock is up like 30-35% since the election. A lot of it is on things like animal spirits is the term I've heard. Not really necessarily running based on fundamentals. So the other thing folks are looking at is the Q4 margin. That could be lower than maybe expected because they had this benefit from FSD deferred revenue in Q3, which doesn't reoccur in Q4. So this thing could definitely go lower. But we still think, compared to the rest of autos and what's happening in 2025, there's reasons to own it. It's just that maybe you want to wait a little for this to kind of flush out.
Okay, so wait a little, but how long before we get more real signal of the sort that's going to put a floor under the stock? There's an expectation that the Trump administration regulations around self-driving are going to help Tesla more than its competitors, I suppose. Any clarity on when we'll know enough more that the market can feel good about that?
Yeah, I think that while I think it's definitely helps the sentiment, we have to just make sure we understand regulating self-driving is a state-by-state local type item. On a federal level, they can do things like take away steering wheels and pedals, which is definitely great, lowers the cost. But ultimately, to get robotaxis deployed, that's done on a state and local basis. But still, I do think a formal announcement there would help the stock. I think what folks are really waiting on is the new car. Right. The new, whatever they call it, Model Q, I think is what was kind of in the press talked about potential name. This is the affordable car that's below $30,000. Some people think it could look like the Cybercab, which a lot of people like. If this reignites volume growth, then whatever they just did now, today's number, which was a slight miss, that's all forgotten. Right. Because now you have growth. Remember, these guys haven't had a new model in years. It's just been Model 3, Model Y, and now finally we get something really compelling. So, that could be a catalyst for shares, especially with this pullback. I just think like this margin number that we're going to get in Q4 earnings, which I think is Feb 29, I think folks may be waiting for that just to make sure they don't buy into another pullback. But yeah, certainly the news of this new model, affordable car, could be another positive catalyst.
Okay, so certainly items to watch here into 2025. I am curious, though, because you do have this outperform rating, but you got a $313 price target. Stock closed at $379 and change today. Does your price target need to come up? And I know you talked about fundamentals, but I'm going to ask maybe it's a really basic tongue-in-cheek question, but has Tesla ever traded on fundamentals?
No, and that's you nailed it exactly. The way the Tesla trades, it's on narrative, right? And very easily I can come up with a much higher price target. My price target is very conservative. I only value autonomy with certain market share assumptions, FSD with certain assumptions. I don't give very little credit for humanoid robot, which some folks, you could do the math on that. If it becomes a consumer appliance, it could be trillions of value. So I understand the question. I totally get it. I think my upside price target is above where the stock is trading today. So I think it trades more on sentiment, and also it's a relative rating is what we have. Autos right now, it's a very tough place to be. Lots of uncertainty. So in that context, I do think it's worthwhile owning Tesla, especially given a pullback scenario. So quickly then, I realize this is a small piece of the Tesla portfolio, but the energy storage business, those numbers were actually pretty decent today, and they've been better than expected in the last couple of earnings reports as well. Should we be paying more attention to that? Yeah, definitely. It's worth like over 100 billion of valuation for my valuation, which for most companies would be amazing. The thing is, Tesla's market cap is 1.2 or 1.3 trillion dollars. So like, While it does matter, and it will impact numbers, financials now, you saw a huge monster number in Q4. In aggregate, this is still going to be important, but a small piece of the overall valuation, especially at such a high valuation point.